Thanks for joining us at XM.com. This is the Weekly Outlook. We'll be having a look at the week ahead. I'm Christina Marujos, and helping me to do that is Mario Sechikiriakos, investment analyst. With the U.S. presidential election just 10 days away, one would think that that's enough to keep markets busy. However, this coming week offers a lot of central bank meetings and important data releases as well. But Marios, before we get into that, let's start by having a look at the U.S. The stimulus bill negotiations drag on as Election Day moves closer. So how do you see the dollar and stocks performing this crucial upcoming week?
Hello, Christina. Well, this last week, the dollar and stock markets were focused on very different things. So the dollar was looking mainly at the stimulus negotiations. We had some signs that we're making progress on that front, that nobody's really expecting a package to pass before the election, but there are hopes that we might get one right afterwards. So speculation for a large package pushed the dollar lower this week, but the enthusiasm for a deal wasn't enough to boost the stock market. Now, I believe the stock market is looking mainly at the election, where the race has tightened quite significantly. If you look at opinion polls, Biden is still leading Trump by a pretty comfortable margin, but the gap has narrowed, especially in the most important battleground states like Florida and Pennsylvania. Now, this raises the risk that we get a contested election where we end up in the courts for weeks, and more importantly, it makes a divided Congress more likely. Or if we do get a divided Congress, if next year the economy is in trouble again, the chances that we get another stimulus package would drop quite drastically, and I believe that's what's spooking the stock market right now. Now, looking ahead at the coming week, I would expect the most important variable for both the dollar and stocks to be opinion polls. If we see any further signs that Trump and the Republicans are catching up, that could increase the uncertainty, push the stock market a little lower, and perhaps boost the dollar a little.
The U.S., of course, will be in the spotlight, but let's cross into Europe, which is witnessing a dramatic rise in new virus infections, and in turn, countries across the region are imposing new restrictions, which is threatening fourth quarter growth. Do you think this will force the European Central Bank, which meets on Thursday, to provide more support? And if so, what is the outlook for the euro?
I do think they will provide more support, just not immediately. I think that's going to happen in December, and they're going to signal that it's happening at this meeting. Now, let's back up a little bit. The European economy was already in trouble before infections skyrocketed. Core inflation rate hit a record low in September. The PMIs are suggesting the recovery is slowing down, and then we got a huge spike in infections. Now, that has led many governments to implement partial lockdowns, curfews. A lot of businesses are operating at reduced capacity, and most crucially, consumers have turned defensive. If you look at Google mobility data, you will see a sharp drop in mobility across Europe. Now, all of this implies that the risk that growth turns negative again in quarter four has increased very drastically, and I believe that the European Central Bank will be forced to do something before long, and that they will adopt a more cautious tone at this meeting and open the door for doing more. As far as the euro is concerned, we haven't really seen it react a lot to all these risks, mainly because the dollar has been under even bigger pressure, but I believe it's only a matter of time until the euro has a reality check moment.
Staying on the central bank front, the Bank of Canada meets on Wednesday. Admittedly, Canada's economy has been improving steadily lately. Will the Bank of Canada signal any changes to policy?
No, I don't think so. The economy has improved quite drastically lately. Core inflation is accelerating, retail sales are up, the unemployment rate has fallen. Yes, infections have risen a little, but they are very much under control. So the Bank of Canada is unlikely to do anything. The markets agree they're not pricing in any chances of rate cuts over the entire next year, but I don't think the Bank of Canada will be a massive driver for the loonie. The loonie lately has been very correlated to the S&P 500 and stock markets, but the correlation between the loonie and oil has fallen quite drastically as well. So stock markets are more important than oil prices for the loonie right now, and therefore I believe that the most crucial drivers for the loonie will also be the US election and perhaps the stimulus talks.
It appears it's going to be a fairly predictable meeting for the Bank of Japan as well, which meets on Thursday. However, the yen has been driven mainly by global risk sentiment lately. Do we expect any changes in this trend this week?
No, the Bank of Japan or Japanese economic data don't have any impact on the yen anymore. The yen responds almost entirely to global risk sentiment, and on that front, I believe that, for example, if we see infections in Europe continue to soar, then we might see euro-yen heading lower.
And last but not least, let's turn to the data. We'll be getting U.S. GDP figures as well as a barrage of earnings this coming week. What should investors be on the lookout for?
Well, the most important one is third quarter US GDP. A sharp rebound is expected. In fact, I believe that we might see a positive surprise. If you look at the Atlanta Fed GDP now model, it's even more optimistic than the official forecasts. But the real question is, do the data matter for the markets right now? And I believe the answer is no, because we have bigger fish to fry right now. You have politics, the election, stimulus talks, so the data are of secondary importance in a sense. What might actually matter are the earnings from Apple, Amazon, Microsoft, Google, and so on. All of these tech giants have a huge weight in indices like the S&P 500, so their results could matter not just for their own shares, but for the broader market as well.
Marios, thank you so much for joining me today. This was the Weekly Outlook. Thanks for watching at xm.com.